So let's go ahead and dive in and talk about stocks, what the stock market is, and how we can get involved. So the stock market itself is a market where individuals around the world can come and buy and sell shares of publicly traded companies. A publicly traded company who has decided to offer their shares to the world or to the public through investment banking evaluations and working directly with the stock exchange. So in the stock market, what we consider stock or shares are instruments offered by companies where we actually are not owning the actual company contrary to popular belief, but we're actually owning shares to vote in the company. So let me go ahead and break it down and start from the beginning. So a company who has done well for itself decides to go public, and they work with an investment bank to then offer this to the public. The investment bank goes through the numbers, calculations, and makes a valuation. Once they make a valuation, then the company goes to work with a stock exchange and list their company to the public. Once those are made public, then we can purchase them. But what we're actually purchasing is not ownership of the company, but what we're purchasing is the ability to vote in the decisions in the company. So shareholders have the right, when they put their investment into the company, to make decisions of board of directors, to make oversight decisions based on how the offers are made. So essentially, we're buying right to vote in the company by investing into that company. And we're not actually purchasing ownership of the company. Now, this is different from a privately owned company. More oftentimes, when we put money into a privately owned company, we either are receiving direct return from the profits of that company, or we're actually made part owner at a percentage and then actually own part of the company, its real estate and holdings and everything else that goes with that company. As a shareholder, we're not actually involved, or we're not actually owning the property or the actual tangible assets or intangible assets of the company, but what we are given is the right to make decisions in the company as an exchange for investing our funds into that company. What this means is that the more shares we hold, the bigger our voice is, or the louder our voice is in making those decisions, whether it's voting on executive directors or voting on oversight decisions in the company. Our voice gets larger as the more shares we hold. So in turn, we're not actually owning ownership of the company, but we still profit from the company. So for example, if a company makes a very good return on investment in the first quarter, what the company does, if you own a privately portion of the company, then you get a portion of those funds back after all of the expenses and salaries are paid out. As shareholders, what we actually get in return is that the company then pays out their salaries, pays out their expenses, and then they receive the profits after that, the net profit, and then they take a portion of that and pay it out to the shareholders because they're investors in the company. Oftentimes they're paid out in dividends on a yearly, quarterly, monthly basis. Some different structures or different investment vehicles offer payments and coupons, and we'll get into that later, which is bonds and real estate investment trusts. As shareholders, what we get also, which is an awesome thing, is once the company's value increases, the share price increases. It makes it more desirable to own a company that is profiting and doing well than it does a company that's not doing well, which we see the change in exchange prices. And so on top of receiving a dividend, if that company does pay dividends on holding the shares, and on top of being able to vote in decisions, we can see capital appreciation of our shares because the value of the company rises. That means the values of the share rises as well. And so that's essentially what a stock is. For exchange for our investment, we're given the right to vote on board of directors, and we also can participate in a percentage of return on investment, which is called dividends. And in addition, we are also given that opportunity to capitalize on the company's appreciation and value. If they're doing well in business, we get a return on that investment as well. Stock markets are where markets offer exchange of stocks, where they go back and forth, and we can do that all around the world. So we'll go ahead and dive into the next video. I hope this makes sense. I hope that there's an understanding of stocks. Let me know if you have any questions. I definitely can answer them to the best of my ability. Thanks again, and we'll catch you in the next video.